Meantime, I want to bring in Priya Misra, Global Head of Rate Strategy at TD Strategies. Good morning to you. Priya, what do you think is baked into the market at this moment? I mean, what do you think the market is expecting, and what kind of tantrum or not will they have come tomorrow afternoon if they don't hear what they're expecting?
Sure. So we've had quite the rates move in the last couple of weeks. I think rates have declined. A lot of that was position capitulation, I think short covering. It's very painful to be short rates when we're stuck in a range. But I think now we're heading into this Fed meeting with a lot of dovishness priced in. Now, I was listening to that survey earlier that you were talking about. We don't expect the first rate hike. There's many steps that the Fed needs to do. The first thing is they need to start to have the talk. Do they start to at least talk about the plan for reducing QE? We think actually this is the meeting where they will do that. So given that the rates market is priced for all this dovishness, for the Fed to continue to say that inflation is transitory, that they still don't need to talk about QE, I think there could be a bit of a rates reaction. But I don't think that the 10-year rises a whole lot above 170, because I think the Fed will continue to say that they think this is transitory. They need to see more data to see that the rise in inflation is sustained. But at least let's start to talk about what's the sequencing, what's the timing, what's the tolerance of the inflation overshoot. I think, all of these questions, I think they at least start that process of discussion this meeting.
So Priya, Paul Tudor Jones yesterday said that if he hears nothing, game on. Game on in a big way, meaning he would go long the inflation trade in a major way. Let's assume you don't hear too much, but you hear a couple of the right words, though. Does that settle things down? By the way, what happens to the equity market? Does the equity market take off on that, or does it actually retreat?
I think it's all about how Chair Powell threads that needle, right? What's the so number one, what is his view on how long of a tolerance of an overshoot will the Fed tolerate? If it is a couple of years, I think this is game on for the equity market and the inflation trade, because growth certainly has come stronger than, I think, including the Fed, most economic forecasters. In growth as well as inflation has come in better. If the Fed suggests they can be really patient because they've got all the tools to handle that overshoot, or they can bring inflation back down, I actually think that means accommodation is here for a while. That means the first Fed rate hike, maybe in our call, it's late 23 or 24, so much further out. So it's about how does he message, what are the tools?
Right.
What I do worry about...
What's the chance he's actually...
Sorry, go ahead.
Go ahead.
No, what I was talking about was, how quickly do they want to bring it down? The big fear is if inflation rises and the Fed then slams on the brakes, well, that's really problematic, because that's going to tighten financial conditions much sooner. 10-year real rates are near -1%. If that goes up a lot, I think that's really bad news for the equity market. I don't think we hear that just yet.
But that's what I was going to ask. What is the chance that Jay Powell has what appears to be the revelation that Paul Tudor Jones is having, that James Gorman is having, that Jamie Dimon is having? What is the chance that he comes out and says, you know what, we've rethought this a little bit? Or not just we've rethought it, but we've seen data that's changed our mind a bit.
Right. So I would say nothing in the inflation data is telling us that it's sustained just yet. But I have to say, this is unprecedented times. We've never had this level of fiscal stimulus. Maybe some of the structural disinflation forces are offset with all the fiscal stimulus. I think some humility from the Fed will be good. But from the data, we see all of the increase in inflation, really COVID-impacted sectors. It's travel, it's used cars. We're not yet seeing wage inflation. That's what would give us concern that this is sustained. But I think humility from them, realizing that we don't know a lot of the, we haven't lived through this episode. I think at least that will tell us that they won't let it run forever.
Shepard Smith here. Thanks for watching CNBC on YouTube.